Traders, what's up? Welcome back to another video. Today we're going to be addressing the elephant in the room. We're going to be talking about all the accounts that are closing down here at Charles Schwab, here at ThinkorSwim. Now, to be clear, my account personally did not get shut down, but some close friends, some close traders in the chat room, their accounts are now no more, and they're currently searching for new platforms. So in this video, we're going to talk about why accounts are being closed. We're going to share some of the information that the chat room members have gathered to help those of you who are in and around the space. And for those of you who are also, of course, trading high volume, whether you're micro scalping or hyper scalping or atomic scalping, there's different variations of scalping. As you guys know, some people are taking that 10 trades a day, others 100 trades like myself, some others 500-600 trades in a day. So why is Charles Schwab closing down accounts? Well, it has to do with money. Are they making money off of your account? That is the main concern and / question that you have to ask yourself. With hyper scalping, we're getting in and out within seconds. There's not enough time for our data to be shared, for people to target us and be able to see our entries and take trades against us, right? And so to get into the real technicals, right, let's read what one of our chat room members here posted, right? So in summary, in payment for order flow, toxic order flow refers to trades sent to market makers like the Citadel securities that are statistically likely to lose money for the market maker. Toxic order flow, market orders, not utilizing limit orders, right? Not adding liquidity. Let's keep going. Typically, because the traders sending the orders have superior information, faster execution, or strategies that exploit short-term inefficiencies, Citadel loses money on such flow because they cannot fill orders at quoted prices just before prices move against them, leaving them holding inventory that immediately loses value. I think this is the big phrase here, this sentence right here, the big sentence in this entire thing. Citadel loses money on such flow. So, these brokers, they went to zero commissions, but they weren't anticipating people to be in and out so quickly, utilizing market orders at such a rate, especially when Schwab is then offering price improvement at some point. I don't think they offer it anymore. They might say they do, but they don't. So, we'll continue here, but just to kind of summarize this and talk a little bit about this, hyper scalping was never really a thing. We've heard more so about scalping, being in and out of trades within minutes, holding for 5 minutes, 3 minutes, 2 minutes at a time. But of course, when commission went to zero, that's when myself, Marcelo, and others, we developed this hyper scalping style, right? Some people call it other things, where we're getting in and out, utilizing the free commission, utilizing price improvement, and taking trades within seconds. Now, what is a strategy? What is an edge, right? I like the word that they used in here, inefficiencies. When it comes to, if we're going to be very real here, and you guys know I'm pretty real, when it comes to a strategy like hyper scalping or any strategy really in the world, it's about exploiting something that is available, that is there. Now, of course, on the other side, trading is a zero-sum game. Someone has to lose for someone to win. The broker, or let's say the market maker rather, is the one taking the loss. And so what do they do? Because of their strong relationship with companies like Schwab, they send out the hit list. Hey, such and such accounts, get rid of them. We're losing too much money off these guys. And so it begs the question if this strategy can be traded at any platform. Because the Citadel is routing for everybody. Let's be honest here, right? They're one of the bigger ones. Based out of Chicago, they're one of the biggest ones. So if I take my hyper scalping strategy, if I'm taking, or let's not even call it hyper scalping, really, let's call it atomic scalping, because this is where you're getting into like 400 or 500 trades a day, especially on stocks below $1, where these market makers, they make nothing anyways. Is this strategy going to be tradable at other platforms when the Citadel is also routing for all these other brokers and platforms? Is taking too many trades an issue for real now? We had the 390 rule come out a while back, and Schwab saw a lot of pushback from their customers saying, hey, my account is above the PDT. I should not have a restriction on how many times I can trade in a day. Per their agreement, that should be legal. That should be no issue, no violations. And then we started having certain stocks where we couldn't trade after the 390 rule went away. And then again, more pushback from customers. They get rid of that. And now it seems like their back is pushed against the wall here, and they have nothing that they can do besides start cutting accounts. So I think the biggest thing, before we continue with more of this, the biggest thing is for us to adjust, I think, our trading style and to reduce the amount of volume if we're someone who's trading more than, let's say, 150, 200 trades in a day. I think maybe, sticking below that that 190 or that 390 might be the limit, And some people did try things where they opened up multiple accounts, like an IRA or a Roth account, and try to split up the trades. But these people, they can still see that the trade is coming from the same person. So I think staying below that 390 is still a good rule of thumb. For me, I'm doing around 100 trades a day, so I could still go up in the band. But I think for those of us who are pushing over 400, 500, 600 trades, we got to maybe tone it down and just maybe trade less in terms of duration, or just keep an eye on how many trades you're taking throughout the day, right? Some people will go from pre-market till the close. Maybe you say, hey, I'll go from pre-market till 12 p.m. That way I lock off that extra 200 trades I'll usually take throughout the afternoon, right? Whatever works, that'll make sense for your strategy and the hot periods in time throughout the day, because it is unbelievable that this is happening. So coming back to the article here, detailed explanation. Payment for order flow. Retail brokers like Robinhood or E-Trade route customer orders to market makers like the Citadel Security, who pay for this flow. Citadel profits by capturing the spread difference between the bid and the ask price, or by internalizing order flow and hedging risk efficiently. So, of course, this is why over time we're seeing the price improvement worsen, right? Because somebody has to lose, whether it's another trader, a firm, an institution, a bank, somebody has to lose. And guys, behind the scenes, we hang out with certain, people who are in this space. And I remember one time, I'm not going to say any names, but, I'm talking to someone and they're like, hey, yeah, such and such company had to wire us, 13 million, right? Somebody has to lose. And that was in a short squeeze, by the way, right? Even if it's a short seller, actually, right? There can be shorts getting squeezed, taking the loss. It can be a long trader, a big bank, right? Somebody has to lose. As long as it's not the person who has the power losing, nothing is going to happen. But the moment the person with the power starts to lose, there's a problem. There's a massive problem. So I think, that's the key, is to somewhat fly under the radar and just not get into any real trouble. So again, toxic flow comes up again. Professional traders, institutional or high-frequency traders using algorithms to predict short-term price movements. Traders with information advantage. And also I think this has to do also with why some of us are seeing a little bit more issues this year, is that, they might have seen too many people doing well and said, hey, let's shake things up a little bit, right? And so I think right now, this is why price action, which I rely a lot on price action, is not that good. time like now is the time to really be trading with the big whales. This is the time to adjust to now longer holds and more candlesticks. Will scalp opportunities be there for the hyper scalping style? Of course, there's still going to be some key opportunities, different times of days, all kind of things like that. But I think trading more with the big whales will be the key. Supply and demand. You know, some people love to use a book map, these type of indicators, the MACD. I think this is where traders who are utilizing this longer hold style will be able to shine a little bit more. So we're definitely going to have to continue adapting and being in with some longer hold times in some areas to be able to see more reward. So, you know, the toxic order flow seems to be getting to them, but I wonder how much profits it's really taking away, because these platforms, these brokers, they're catering to investors. How many day traders / retail traders are really a part of these platforms percentage wise? And is this also why these platforms never upgraded certain things? For example, I'll utilize DAS Trader for executions when Schwab could easily implement their own advanced hotkeys and level 2s, and you know, but they never do these things. I'm wondering maybe this is why, right? This is probably why. So there's some example scenarios here. High frequency traders sees a large institutional buy order coming through the market. They race to buy shares across venues, including hitting Citadel's offer. Citadel sells to them at $10 within milliseconds. The stock moves up 10 cents. Citadel has sold at 10, but now must cover at 10.10. So then they'll take that loss of 10 cents. So, you know, I mean, we had some traders in here, you know, trading with Tim, one of those traders you guys might know from YouTube, the Team House. BMAC, shout out to him. We also had an interview, and these are great guys too. You know, you hate to see it happen. I think honestly, none of us are really safe, because at the end of the day, we're all trading similarly. Whether these guys may stick around longer till 4 p.m. and trade more, we're still trading very similarly. So, you know, we all got to be careful, have contingencies. You know, whether it's a direct access routing platform. I mean, you guys will see I have E-Trade in the background right here, E-Trade Pro, which the fills are on par with Schwab. But the only downside here, they don't have hotkeys that are great, at least not that I know of. This is E-Trade Pro, the older platform. They do have powered by E-Trade. Some people have mentioned Trade Zero, Webull, and Trade Station. Those are popular 3 that I've heard. You know, I also have a Guardian account that's direct access routing. But you know, I'm so used to Schwab and executing through DAS that I've just stuck with ThinkorSwim. But honestly, Guardian also is integrated through DAS, and so I can just import my hotkeys over and just, you know, boom, my account is fully funded. I more so use it as a swing account, but you know, if I need to, if the time comes, you know, at least we have 2 other options here, because you know, it's just not nice to see, you know, what's happening here, man. But what I will say is that we shouldn't be afraid of this, because at the end of the day, this is what the world is, change. The only thing that's constant in life is change. And so as the times change, we also adjust. We make, you know, the improvements. We go to new platforms. Even if commission comes back tomorrow at $10 a share, there were traders who are trading with commissions at $10, $15 a share, making money. So if they can do it, it's all about us figuring out a strategy that works for that same environment, right? And the number one thing about any strategy is discipline, control, patience, going small first. Those are some of the key things. So, you know, if it comes down to it, we do what we must to ensure success. But again, hopefully this video is going to help out some traders who are out there who are a little bit worried about the issues that we're having with accounts closing down. In summary, once again, toxic order flow, and the market maker Citadel and others not making money off of the quicker, faster trades. So, you know, we got to be careful with the high frequency trading, and also I think maybe how your account is is listed may have something to do with this. We can select non-professional, and then professional traders are paying more of a fee. So if a professional trader is perhaps trading the same way we trade, they might not have this issue because of the status of their account. That's something to also consider when when looking at every option, right? Because even if you have to pay more of a fee to be able to still have the familiarity of the platform you know and love, then that could be something to consider. But yeah, I think that's all. We do have some other articles, some other people posted. You guys can always pause here, check out this. But yeah, man, it's pretty crazy to see. But these things are at the end of the day to be expected. All right, hit that thumbs up, subscribe to the channel. We'll be live tomorrow morning for the pre-market session right here on Schwab, looking for a couple of key trades, and then we'll shut it down. All right, so hit that thumbs up, subscribe. Catch you later.